Hello, everyone. Welcome to Smart Investing. Today is Tuesday, August 13th. Today's video is going to be about the automobile and truck parts industry. We're going to go over 4 stocks and get right to it. First stock that we have is ticker symbol BYDDY. This is an over-the-counter stock. Let me check my volume. I want to make sure you guys hear me pretty good. So again, we're going to be going over fundamentals, basic technicals, and then maybe some quants. Well, not really, because I said I wasn't going to do it anymore. I have a lot of feedback where I have partners following me a little too much, and I need to keep that for my own strategy because I don't want people using it as their own. And again, for your information, I'm not a licensed or insured advisor. So anything I say, please take it as information or research, not investment advice, because investments carry great risk and also great reward. So I don't want to be liable for your losses or your wins. Your final decision is based on you. So I just had to throw that out there. So let's begin the ticker symbol BYDDY. This market cap, it's actually not bad. $30 billion company. I don't know why it's on the over-the-counter market. Maybe it did bad at some point years ago, and now it's doing pretty good as of right now. Volume is very, very low at 5,000. Dividend is only paid 87 cents for the year. That gives it a 1.59%. I do also want to state that markets right now, this video is AM. Again, we're on the East Coast. So markets are open. The time that I have right now, it is 10:38 a.m. Another piece of live info that I want you guys to know. So again, markets are open. So I don't know if you might see price fluctuations as I'm doing this video. We have the opening and close, 55 and 54. So only $1 difference. 52-week high and low. A low of 35, a high of 85. So that's a difference of $50. That's not too bad. Earnings are around 2.9. PE ratio at the current moment is around 19. Forward PE, they have 350. So they're looking at this company at a 3 times growth rate. I don't know why. I don't see why. Earnings here. Well, dividend date is June, so that's already been paid. And then again, the next earnings will be paid August at the end of this month. So having that basic info, it looks okay, but we're going to dig further deep into fundamentals in a little bit. The chart, let's look at the 5 years. So it's gone up since 2020 and not bad. It hasn't gone down past 40. You see a lot of volatility up and down, and you have that price range between 40 and around 80 bucks. So even though you have that range, we're looking at about, let me see here. So we're looking at about 55, 53. Yeah, we're looking at about 50, 52, $53. Where it seems pretty fair. I'm not going to use my indicators because, again, what might work for me might not work for you. even though I'm highly accurate, again, I don't think it's a good idea for me to show you my strategy because again, the way I work might not be comfortable for the way you work. And again, this is not investment advice. So I know people like to copy off of other people, but again, I don't want to be held responsible for your losses. Anyhow, we're all on here sharing info. So again, 52-53 range would be fair. The 1 year, you see that drop all the way down to about 43 and change, rounded off to 44. Highly volatile. It had its moments where it was pretty volatile, and then these slow movements. It's a mix. It's a mix of big, small, medium movements. This is a tricky stock, actually. Very, very tricky stock. Last 3 months, it's gone up, and now it's just gone flat. So you're going to have those periods where it's going up and down. Moving on from that. So anyways, let's look at the fundamentals. I don't want to take too long. I already took up about 6 minutes. So I'm going to dig right into the financials. We have here guideline practices. We have the results for 2022. That's not what I want. That's old info. I don't even have 2023. I wish I have annual results, and let's see if we have that. Okay, so we do have 2023. That's not bad. Annual results, we have 5% on the ROA. Return on the equity, 22%, which looks pretty good. Earnings per share went from 11 in 2022 to 20. So that's pretty good. Margins have gone up about 2%. That's not bad. It's pretty, fair. It's pretty fair, 2%. For a $30 billion company, depending on what they do. Not too bad. We have, in 2023, their debt levels, the last 5 years, they went from 68% all the way to 77%. That's kind of bad. I mean, I hope they can control it. I hope they can still do well under management with that kind of process. Net income, we have 31 billion. Revenue at 602 billion. That's kind of high. That is extremely high. What kind of currency is this company? China-based company, so auto and truck manufacturers. I was gonna say, how you have a $602 billion company and I've never even heard of them. So that's the reason why. They are a Chinese company. So cash flow from operations, we have about 170. Then we have negative 125, so 40 billion positive. So 53 billion in cash flow. So this company actually has pretty good numbers. Slow moving, but I'd say, yeah, it's a decent stock. I wouldn't highly recommend it to add to like your personal watch list, but I will say, yes, it is a pretty good company. Next one up that we have is ticker symbol LAZR, Luminaire Technology. This is at 95 cents. Market cap at 471 million. Looks awful. The volume is really, really high. Last 5 years, highest was around $40. Well, 37. Then we have this year, downtrend from about $7 all the way down to like $1. That slow bleed is just a nightmare. And then even with the earnings right here, they went from $1.38. It doesn't seem like much, but that drop, nail in the coffin. 5-year low. I mean, and then that drop right there, that roller coaster drop right there, that's pretty bad. That is pretty bad. So, looking at that alone, I don't even think I have to look at the first page, the basic numbers. Earnings are negative. PE ratios, I don't even have anything. 52-week high and low, difference of about $7. I mean, looks awful. If you think you're gonna make like 50% on this in the next few weeks or days or whatever, just because the volume is high, I doubt it. We're in a mixed market, pretty flat, neutral market. Slightly going bearish, slowing down. But other than that, this is a stock that has been on a downtrend for the long trend as well. So 5-year chart, 1-year chart, that 3-month, again, it's just that nail on the coffin right there, that big drop, especially during earnings. There's not much to say. So they look bad both technically and for the fundamentals. Estimates. We're having negative estimates still, and then they reported slightly below. In Q3 2023, they've actually estimated it for it to be negative 50 cents on their earnings. Let's look at the annual report. So for 2023, awful return on asset. Equity, 454%. Their earnings are negative 1.4. Net margins are negative 800. I mean, I don't even know how that's possible, but it looks awful. Their debt is at 143%. I mean, you have these swings up and down with the chart, and this is basically technically based. And again, the company looks horrible with these numbers. Negative 571 million for the net income. Revenue is at 69 million. So, awful numbers. Even their assets, again, 140, they're more in debt than their assets are to show for it. Operating cash flow at negative 247. Positive cash flow they have for investing is 236. That still leaves negative about 11 million. 80 million in cash flow. So you figure 90 million to be on the safe side. But even then, net income, awful. So even if you combine the income with the cash flow, they're still above 460 at a minimum base. Negative cash flow overall, 460 at least. Awful. That looks awful. So for this company, I'm going to say no. This is a bad company. Again, even on technicals, if you think you're going to gain, double digits on this stock, you think it's going to go to $2, $3, I highly doubt it. Not anytime soon. But again, company looks awful overall. I apologize. Hold on 1 second. So I said, yes, that's a good company, and this one, no. Would I add it to the watch list? Not really, but again, just stating that, which is a good company and which one's a bad one. Next one up, General Motors. We have here volume at about 2 million, market cap around 48 billion. The earnings are around 9. Dividend is only 50 cents. So let's look at the last 5 years. It looks pretty flat. 1 year, it looks like it's on an uptrend. Last 3 months, looks pretty flat. It had its periods where it's gone slightly up, and now after earnings, it's just gone down. And this was, again, within the last 3 months. We're going to move on to the fundamentals for that. So again, slight uptrend, then it went down. We're going to look at the general accounting practices. They look like they've been beating earnings the last 4 times, slightly missed in Q2. So let me see something real quick. What was the date on that? So anyhow, they have positive earnings, have retained at least around an average of about $2 per earning per quarter, which ain't bad. So that's what gives you the at least $8 in earnings for the year. So slight downgrade for Q3 2024. It's telling me the earnings release next time will be in October. We're months away from that. We're going to look at the annual numbers. Return on assets in 2023, 3.7. Return on equity, 14%. Earnings are at 7.3. So from the last 5 years, they've gotten better. Net margins slightly downgraded. That's pretty normal from 2022 going into 2023. So they went from 6.3 all the way to like 5.9 on their net margins. Not bad. Their debt is around 75%. That's pretty high. They need to knock out some debt. So far, General Motors actually looks good. They actually look good, but they need some slight work. Net incomes. We have at 9.84. And previously in 2022, that was 9.7. So about 1.3%. So that's not bad considering their market cap. So a slight rise from 2022 going into 2023. Total revenue, they went from 156 billion all the way to 171. That's almost a 10% gain for the year. That's actually pretty good for a company of that size. So General Motors actually has pretty good numbers. Now, let's look at their cash flow. Operating is about 21. Investing is about 14.6. So we have about 7 billion left. And financing, we have 6.35. Pretty good management. So that leaves them with about 350 million at least in positive cash flow. They are definitely able to afford the dividend. And again, for GM, I would say yes, they are a good company. Need some slight work, but again, they can be established as a good company even till today. Last one up is ticker symbol AYRO. Volume is at 6,000. Market cap is only at 4 million. Last 5 years, from 2021, highest was about $80. Then new lows, even for this year. So this stock is pretty much dead. Even the last 3 months went from the last earnings from 1.2 all the way to about 75 cents. This is another stock that's a nail in the coffin. We might start seeing these a little bit more often. I wouldn't say soon, but maybe in Q4 or in Q1 for 2025. So these monster decreases, you have a loss of about 10% within the last month. We're going to jump into the fundamentals, and this is going to be the finale for this. So we have negative earnings, negative estimates. So negative 1.34. So for Q3, they already reported negative 3. That is a big miss. And then they still have negative reports for their results, for their earnings reports. This stock is horrible. Looking at the numbers, negative 63% for their return on assets, negative 88%, negative 8 on their earnings. I mean, negative 6,000. How is that even possible for the net margins? The debt is at 52%. So they went from 5% all the way to 50%. That's insane. That's a 10-time increase in their debt. I mean, it's possible, but again, I just don't understand, because they were doing so good here, and then I guess they took out some debt. But other than that, their earnings just don't support it. Looks pretty awful. Net income at negative 34 million. Their revenue is only $500,000. That's pretty sad. And then you're losing more. Obviously, what your revenue is can't even cover nothing at all. So you're pretty much losing money but staying in business. Some of these businesses need to fail, and this is one of them. Cash flow, I don't even think it will save it at this point. Negative 26 on their operating. So we have about 9 on investing. So that gives it about 17. And then 21 million. So 17 and 21. That gives it about 38 million. So with their cash flow, it can cover their net income above 4 million. But that debt, I mean, and they're not earning nothing, so I just don't get it. Their cash flow is what's saving them, but again, they still have trouble with earnings and revenue, bottom line and top line. Cash flow is good, but that's it. You can't just solely rely on cash flow and then have everything else look bad and become bad. Those earning reports, it's going to keep downgrading the stock. You're going to earn less money overall, and, this stock is just going to be worthless. I forgot the time frame between if the stock is under $1 before it gets delisted, but again, stock looks awful. I'm going to say no to this stock. It's a bad stock. So there you have it. Thank you guys for watching. Here's a quick overview. So for this stock, no. This is a good stock. This is a good company. And then I believe I said no and no. So there you have it. One good company out of these 4. Thank you guys for watching. I'll see you guys in the next one.